Hey everyone, welcome back to the channel. And today we are talking about purchasing a home here in the state of Maryland with a VA loan. So if you are someone who has VA eligibility and VA benefits that you may want to use while purchasing a home here in Maryland, then this video is for you. And let's get started right now. Hey everyone, welcome back to the Living in Maryland channel where we discuss all things living here in the great state of Maryland. So if that's the kind of information that you're looking for, then you are definitely in the right spot and we really appreciate you being here. And if you are considering about making a move here to Maryland, if you're wondering whether purchasing a home here in Maryland is the right move for you, we absolutely love helping out in any way possible and having conversations with people about that. So however you feel most comfortable reaching out, whether that's by phone, text, or email, days, nights, and weekends, we've got your back when moving here to the great state of Maryland. All right, first benefit that I wanted to go over is that if you are a 100% disabled veteran, you do qualify for a 100% property tax exemption here in Maryland. So this is something that I absolutely love, that our state here in Maryland takes care of our disabled veterans. So make sure if this is something that applies to you, that this is something that you apply for. Now, I do want to mention that you do have to go through the process and fully close on the property before you can apply for this. But this is something to just make sure you're aware of so that you can let your realtor know, let the title company know that you're working with. If you do end up purchasing a home, that this is something that you're going to apply for. I know for me, this is something that I always give my clients the form ahead of time once we're under contract. So this is something that we can just kind of be preparing for. And if you have any other questions about this process, I've had several clients go through this. So I know that this is something that they don't make too hard on people. It is a little bit of a process, but it's definitely something that can get done usually in about 2 to 4 months, depending on how much volume there is. But it typically can get done in that time frame. Now, I do want to mention as well, this is a question that I've gotten a lot. What happens, do I get reimbursed? What happens with the property taxes that I pay leading up to getting accepted and approved for the full exemption? So they are going to mail you a check. They're going to reimburse you for any property taxes that you pay leading up to that. And that's probably going to be a little bit of a chunk, because when you go to apply for the loan, the VA loan is going to have, and the lender is going to have to approve you based on the property taxes. So you're going to have to get approved for that loan based on if you were to pay those property taxes, even though a full exemption is coming. And then they're going to have to collect, property taxes from you at closing in order to start your escrow account up. So all that money is going to come back to you in reimbursement from the VA, or rather from the state of Maryland, once you get that approved. So that's something that you don't need to worry about, although it is going to be a little bit of money up front. So that's something to be prepared for as well. All right, next benefit that I want to go over is that if you are 10% or more disabled with the VA, you are going to qualify for a VA funding fee exemption. And this is a really, really nice benefit. So the VA loan has what's called a funding fee, which I would imagine just goes towards, it goes directly to the VA, I know that, and then it's going to go towards, funding this VA loan and making sure that veterans for hopefully a long time to come will have access to this program. But they do give an exemption to anybody who is 10% or more disabled. So if that is applicable to you, then you're going to save a good chunk of money come time when you buy a home. So, and it's for first-time VA loan users, it's 2.3%. So if you're purchasing, let's just say it's a $500,000 home, that's going to save you roughly $12,000. So it's a huge chunk. Now, the funding fee is almost always, I've actually never seen it paid up front, although the veteran, if you don't qualify for this, you have the right to pay it up front at closing as a closing cost. But almost everybody just wraps it into the loan. The VA allows you to do that. So if you're buying a $500,000 home and you're doing 100% financing, the day you close, you now owe $512,000. So if you are exempt from that and you're 10% or more disabled, now you only owe $500,000 the day that you close. So it does save you a lot of money come time when you move, sell, pay off that loan, which is going to come eventually. So that money will be saved at some point, which is a huge benefit. Now, if you are a second time VA user, that VA funding fee jumps to 3.6%. So it's just a massive savings, especially if you've already used a VA loan before. So just a really cool benefit. Make sure to ask about that and be aware that that's going to be applicable to you if you are 10% or more disabled. All right, next benefit that I wanted to mention is that locally here in Central Maryland, there are a ton of other veterans, buyers, and specifically sellers, which is kind of cool if you are looking to buy because a lot of times when I have VA buyers who are out there looking, if we run into a VA seller, a lot of times they'll want to work with other VA buyers over anyone else. So this just kind of gives you a benefit when you fall in love with a property and you happen to run into another VA seller. It could give you a little bit of a leg up, especially if you're in a competitive situation. So when I say in Central Maryland, you've got Fort Meade, kind of right in Anne Arundel County, which is Maryland's largest employer, where you have ton of VA veteran employees as well as government employees. And then you've got the Navy Academy down in Annapolis. So if you're looking in nearby or in either of those markets, it could be a huge benefit if you run into a veteran seller. All right, and next benefit I wanted to mention is that the VA loan has no PMI, PMI standing for private mortgage insurance. And what this is that when you go to get a loan, if you are putting less than 20% down, all other loans require some version of this PMI, which is just an insurance policy to protect the bank against borrower default. So this is a really huge benefit that comes with the VA loan. Now, just to give you an idea of what that looks like in potential savings by using the VA loan versus say FHA or conventional, which are the other two most popular loan types, is that if you are purchasing anywhere from a $400,000 to $500,000 home, just as an example, monthly PMI could range anywhere from $150 to over $300 a month on those other loan types. And it's hard to give an exact amount just because it varies based on loan amount, credit score, overall lender or loan profile. So, but that's a lot of savings as well each month. So that's going to allow you to either save that money or maybe afford a little more where it's not having wasted part of your payment going to an insurance policy that's really not doing or adding any value to the borrower itself. So this is something that's really huge and a very, very nice benefit of the VA loan. And the other thing I wanted to mention is that VA loan rates are on average about 0.25% less when looked at side by side to a conventional loan. So if you're looking at a Fannie Mae, Freddie Mac conventional loan and it's at, let's say, 6%, well, a VA loan's usually going to be right around 5.75. And this is on average. I mean, rates are going to vary from lender to lender, but typically your government loans, which are VA and FHA, are just less than conventional for whatever reason. I'm not sure exactly why that is, but that is something that you will notice. So kind of another cool benefit of going to VA as well. All right, lastly, I wanted to mention is that all VA loans are assumable. So this is a very, very nice benefit, especially in today's environment with higher interest rates, and we don't know how long that's going to last. So I'm working with a couple people now who are going through this assumable process, and it's definitely it's a challenge. Working with the banks is always a challenge. So if you have any questions on that, please feel free to reach out. And I can share my thoughts on that and how that's going. And I do think it's going to get easier and easier as we move along. So, when rates at the end of last year were down around 3%, they had been under 4.5, really for 10 to 12 years. So the banks were not doing any of these assumptions because there was no need for it. Rates were so low, nobody would really had a need for it. So now that need is coming back, I know I've talked to several banks and their applications for these assumable products or parts of the VA loan are just skyrocketing. So as they do more of them, as they get this process done more and more practice with it, I think it's going to become smoother. But right now it's a little bit of a process. These assumptions, I would plan at least 2 to 3 months. Hopefully it's a little less than that, but that seems to be, in my experience, what this is going to be. Now, if you are a buyer considering this, it's got to be obviously a VA loan that the seller has on the property that you're looking for. And the important part to note here is that you can only assume what the seller's principal balance is. So the problem right now is that although rates are higher and people are looking to do these assumptions, values are also higher. So if you had a VA seller that you're looking to potentially offer an assumable purchase on that home, a lot of times there's going to be a gap. So there's going to be what they owe and then what you're willing to pay for the property. So let's say they owe $300,000, the property's worth $425,000. There's $125,000 there because you can only assume the $300,000. So where's that money going to come from? So if you've got the savings, then that's going to be the easiest route. You can look into either lines of credit or additional financing options for that gap. But that's the thing that you really want to be aware of and kind of look into, because a lot of times you're going to run into that gap unless you run into a VA seller who really bought in the last 6 to 12 months. Then maybe there's a very, very small gap or no gap at all. So something to be aware of, but that's kind of the biggest hurdle that we're running into right now, is finding workarounds and just kind of coming up with solutions to cover that gap, because values are still they've gone up in the last several years. So kind of coming up with that and finding solutions for that is kind of top priority when it comes to these. So definitely something to keep in mind if you are considering an assumable loan option. All right, everyone, thanks so much for watching. If you have any questions at all, please feel free to reach out or shoot a comment below, and we'll see you at the next video.